Happy Monday, traders. Welcome to another market analysis for Monday, March 4th, 2013. Let's jump right into the ES. As you can see, we pulled back to the extension that we were talking about last week. We had that extension, so from lows to highs from the end of 2012, we broke the negative 61.8. The negative 23 and the 61.8, and that's why we're now drawing from highs to highs. So we got that pullback. No reason to be overly bearish, as we were talking about. We would potentially see a little bit of selling in the prior week, but until we break an extension 61.8 at the very least, there would be no reason to be overly bearish, because an extension is simply a bull flag. An extension is a very strong market. So if we have an extension long, that's a very bullish market. If we have an extension short, it's a very bearish market. So we are now approaching highs once again. If we go into the smaller time frame on the ES, we were actually not only in a daily long, but we had a larger 15-minute long that was trading on Friday. And then if we zoom in to today, Monday, we had a 15-minute long. We broke the opposing short on Friday, and we traded to the 15-minute long, pulled back on Friday, and that is what was holding. There we go. That's what held on Monday here today. And so zooming into even a smaller time frame, the 512 tick chart, we can take a look at a few trades. Now, keeping in mind that both the daily, the 15, and a larger 15 and a smaller 15 were bullish, that gave us some bullish sentiment coming into the day. But the first trade I took was a short, and I'll tell you why. So I've got trading hours only set here, so the market opens at 8:30 Central Time. First half hour goes by. We had a high tick of the day that lined up at 8:54, and that was the high of the day at that point in time. And so what I did was I drew from highs to lows, and I took the first short that occurred after the high tick on the NYSE tick chart, on the NYSE tick, as well as the high of the day. So when we have a high in price that lines up with the high tick of the day, that could potentially be the high of the day. Now, I didn't expect that to hold, but for a short-term trade opportunity, it's one of my favorite setups. So we had a high tick at the high of the day, put a order in at 15 evens. We traded up, got filled, went into the 61.8 by one tick. I had my stop at 16s. So I round the 61.8 was 55s, so I round up to 75s and then add a tick. So I had plenty of wiggle room, and took that down to the negative 23% target. From there, I drew up the next short that didn't get a fill on. That we had a little bit of reaction and selling. Again, I didn't get a fill there. We came up and broke the 61.8. And so that was my cue to flip and start taking long. So I simply drew up the long setup. 1475s was the entry. Stop below the 61.8. Again, rounding down, since we're at an odd number, 97s. I round down to 75s and then add a tick, so 50s. So even though we traded in by a tick, you're still giving yourself some wiggle room. And this one took a little bit to develop. This was right about at 10 o'clock, just before at 9:55 that I got filled, and then just kind of sat. Didn't do a whole lot, and then we finally got that push. We got the pullback, and we broke highs once again. I was able to tighten my stop, and right about as I did that, we came up and hit the target. And then for the target on these little bit larger moves where you have 3 to 4 points, I will round down and add a tick. So for my limit order, for my target price, I rounded down to 75s, since we're at 81s, rounded down to 75s, and then added a tick, so it was out at 50s. So, and then at that point, it was about quitting time in terms of day trading goes. For me, I like to wrap it up around 10:30 Central Time as we get going into the lunch session and call it a day. So the next setup, drawing from lows to highs, gave us a long at 15/16. Again, nice little bounce, and then we turned around and sold off a little bit into the lunchtime session. But by that point, I was long gone from the day trading front. So that's the ES. If we go back to the daily chart, looking nice and bullish. Going over to the euro, only had one trade in the euro today, and it was also a short. The daily chart that we have here has broke the 61.8. I've got quite a few lines on the chart here, but I'm going to leave those up for now. We broke the daily 61.8, and so the next and last halfway back that we have is the full halfway back from August of 2012 to highs of February. So that would be the final bounce point, 28.83s. In the meantime, we could also come all the way halfway back short, up at 33.41s. I don't think we'll get all the way halfway back to the short because we do have an extension that we'll trade first. We had a traditional from highs to lows that traded. Again, we came down, we broke through the negative 23, we broke through the 61.8, so you can draw from lows to lows, and that gives us a next extension short at 31.62s. If I go to today's daily chart, we had a 15-minute back on Monday of last week, highs to lows on Tuesday, that traded, entry down to close to the target. We didn't get all the way there, but close enough to where I found it valid to draw the next short setup from highs of Thursday to lows of Friday. And we haven't pulled back to that level, 30.66s. That'll be the next shorting opportunity on the 15-minute chart that I'll be looking at for tomorrow. Here's that 31.62 extension short, so it's not too high. We don't have too far to go above us, about another 140 pips. So that could act as another, a little bit of a bounce, a little rally up to 31.62s before we get another nice push lower. As for today's price action on the 512 tick chart, if I zoom in once again. Actually, before I do that, coming into the morning, I drew up the short setup that we had here, and drew up the opposing long, which had failed very early in the morning. So then I went ahead and drew the short from highs to lows. So this is a very small 15-minute short. So if I go to the tick chart, we had a smaller 15-minute short trading here early in the morning at 7:30. And once that traded, we took out this prior swing low. So I took the first short from highs to lows on the 512 tick chart. We had a little bit of a reaction. I think we went in like 7 pips, and then we turned around and was taken out of that at 02s rather, or 12s. 12s it was, 30.12s was the stop. So 2 pips above. My entry was at 05s. And so at that point, we have a failed long and a failed short. So there's really nothing to do in the meantime until we break out of the range. So we had the long that failed and the short above us. So I drew my line in the sand at 30.21s and 29.97s. And we didn't happen to break, in this case, to the downside until after the European close, at which point you could take from highs to lows. There was a small reaction, and then we turned around and reversed. So Friday happened to be a great day. We can actually, I'll zoom back to Friday once I'm finished up here. But you can see how when we're trading within 250s, how we can chop around, and it's easy to tell that we're in a range when we break a long and then we break a short back to back. And if I pull back to Friday, we had short from highs to lows that traded right about the NYSE open time at 30:03s, and then that took us down right into lows of the day. So it was a really nice, clean setup. Again, we broke the swing low, and we broke the traditional long. We broke the swing low, and so you can pull from highs to lows. Very nice, clean break of the swing low, break of the long setup, and so you can take the next short, or the first short in the new trend in that case. So it certainly pays to wait for the quality trades. Even this setup that we had today broke the swing low. We were at a 15-minute short. It was, certainly a valid trade, but sometimes valid trades don't work out. But it's okay to. I would rather take a valid trade and have it be a loser than just shoot from the hip and happen to make a couple of pips. With that, let's move over to the weekly watch list. Before we do that, talk about the VIX a little bit. Pulling back to that, mid 14 range. We didn't get a whole lot of follow through on. We had the little spike last week, but really not much from that in terms of extra volatility intraday. It has been rather quiet. And if we look at the S&P, this is the high of last week and the low of last week, just sitting inside the range from the 25th on that big sell-off day. So all of these bars so far have been inside bars. We'll see if we can break highs tomorrow. And if we do break highs, it would be very likely that we would break highs of the year and continue to rip pretty hard. The Dow, same thing. We did break out of that range from the larger sell-off last week, but still no break of last week's highs. The Russell, same scenario, and the NASDAQ, which has been pulled down by Apple substantially, is I would say the weakest out of the group. If we take a quick look at Apple, you can see Apple is selling off like crazy. I suppose somewhat could be canceled out by Google, or at least netted out by Google, because Google is making new highs while Apple is making new lows. Nice breakout on Google. We had a nice long over highs that broke out today. So let's flip through some of the stocks that we're in and watching. APO still grinding higher. So I guess before we talk about these individual stocks, the first thing I do on my Sundays when I'm going to flip through my entire watch list is take a look at what the market looks like. And we had kind of this W pattern with a little pullback W pattern. We had two rather large down days in the past couple of weeks. So now that I have that picture in my head, I compare everything, relate everything to the S&P. Now when I go through my individual stocks, I can see, okay, well, APO is relatively strong compared to the S&P. It looks very bullish in itself, and on top of that, it's trending higher while the S&P was trending lower. So like APO a lot. Again, we've got long from this little breakout back here at the end of January, and just continuing to trail our stop as we move higher. WSR also closing in on highs. We have earnings coming up in a little over a week, so I'll be taking half off just before earnings. Oops, VRTS had a little bit of a pullback and then right back up near highs. So this is the first pullback that we've had in quite some time. If we can make it to new highs, we foresee that we can just continue climbing towards that 200 level on VRTS. HSIC, we did have a two-leg pullback, but now we're starting to turn around. GEL, also another one that we talked about back here at the end of January, about getting long, making new highs. Once we pull back and make new highs again, we can take our stop up to the next swing low. FUL, we got a pullback, kind of stop still back here at lows. Once we make new highs, we can start to tighten things up a little bit. TUP, not doing a whole lot, but closing in on new highs. Let's see, AEC. I do like the pattern here in AEC. And now one thing to think about is the S&P today, the candle that the S&P made today closed at highs. It was a very bullish candle. So when I'm looking at my watch list, if I see a long setup, I do want to pay attention to today's price action. So AEC was a bullish candle. We're closing in on highs. So I consider this a valid setup. So I'm going to put a buy stop above highs at 17. We'll call it 84s. Stop below the lows. CRAY triggered today. Got long this one above highs at 2001s. Again, stop below the low. MSI is another one that's just about ready to break out. Nice bullish candle today. PCYC, also a very bullish candle, about to break out. Going to put a stop above highs, a buy stop rather, to get into the trade above highs. PKG, same thing. Bull flag, about to break out of highs. SUI, I like the bullish candle. Doji on the day today, but highs very near. And then finally, let's see, Google, which we already mentioned, broke out of highs. So a couple of bullish setups that we're looking at. And again, these stocks are relatively strong. So when the market breaks out, these should break out more. And then, I'd say surprisingly, but it's not very surprising when you're picking relatively weak stocks. But I think all of my bearish positions today sold off quite substantially. So ABX selling off once again, shorting from below the low of the high bar up here. And again, you want to be looking to enter shorts as the market rallies. So as the market is coming up to new highs and breaking out of highs, I'll be looking through my short watch list for stocks that are maybe getting a little bit of a bounce, but have a very strong downtrend. So that puts me in the position to be putting on shorts when the market is making new highs, when nobody's thinking about shorts. And then when the market pulls back, I'm looking at my long watch list, and I'm putting on new longs when everyone else is thinking about shorts. So you end up doing kind of the opposite of the mass media and that sort of thing. And I think that's really key when putting together a good watch list and getting these real gems here. So ANV, another one, shorted this one from a while back up by 23s, and this thing just continues to tank. BVN gapped up on the open, but then sold off immediately. Same thing, just down, down, down it goes. AU, same scenario, shorted this one below the low of the high bar and continuing to move lower. And let's see, NEM was the last one that is taking off lower as well. So no, Apple we mentioned. I'd be looking to short Apple on a bounce back up here at the 435 level if we do sell off and get that bounce. But there wasn't a whole lot of other longs or shorts rather. Well, we talked about the longs that were looking good for entry, but there weren't a whole lot of shorts that were ready to set up for entry. So we have a good number of positions on already, and I'm continuing to monitor those along with add new positions as we see fit. So that about wraps it up for this week, and I'll be putting together another webinar, I think, later in the week, talking a little bit more specifically about the ES. And I also posted my recap from the New York Traders Expo, which you can find on the blog, as well as the recording in the member dashboard. So with that, I hope you have a great week, and we'll talk to you again soon.